I logged Bitcoin at 30.5K. I thought that the bull market was back. I thought the bear market was over. So I took my whole portfolio and I went all in on 10x leverage.
Well, that's fantastic. A really smart decision, young man. And it's gone.
So it doesn't really matter how long it takes. It doesn't matter how many years it's going to take for people to realize that trading with their mind is a recipe for disaster. You need to trade with a verified edge. Talking about you are thinking about this, you thought the market was going to do this. In the world that we are in the realm of market making, thinking is something that will get you killed. You need statistics, you need spreadsheet. So today on the 4th of December, we just witnessed a beautiful HOD trade where we have a squeeze of the TDI, right? And then the price just made a bursting out with nice vector candles above yesterday's HOD, creating a beautiful extreme range. So that tells us that the market makers, they will be working the Euro USD, they will be working the Euro PES, right? So after we have seen that the price just made a beautiful bursting out of the high, what can we expect? We can expect the market makers to start creating the manipulation above the high to grab people like this who think when they should be knowing. So once we have drawn our anticipations on what the market is going to do, the market did exactly that. Because the market has a memory, guys. This is something that you always need to understand. The market has a memory. It always stores information. It never forgets, especially when the people are giving away money stupidly, recklessly. The market will always repeat the same message. So we have Euro SGD, Euro USD, and Euro CAD making a stop hand high. The reason why I chose CAD just looked beautiful to trade. CAD made a beautiful TDI squeeze. CAD made a beautiful stop hand high to the high side. It left beautiful wicks to the high side. And once the price got back inside of the TDI, you knew that the second leg was coming, right? We definitely knew that the second leg was coming because we never trade first legs. Remember that the moment the price makes a blood inside of the bands, you must wait for the second leg. If price continues to drop, you cannot do anything because that is not a setup anymore. That's something that we cannot trade because it's not part of the edge. So we waited for that, and guess what? Boom. They created that second leg, right? And it's amazing to me that that second leg, they made huge vector candles too. And notice something. When that black candle of the second leg, it made a big bar to the high side, it passed the first leg, right? On chart, it passed the first leg. But now look at what the TDI is doing. The second leg on the TDI, it is lower than the first leg. The second leg, it is higher than the first leg. Yet the first leg, it is higher on the TDI. Yet when you are looking at chart, the second leg is higher. So you know that there is a beautiful divergence that the market makers are creating. But people who are trading with their thoughts, they are going to long this again. People who are trading Bitcoin, it doesn't really matter what asset class it is, the mentality is the same. So once we saw that red candle or that pink candle made a comeback back inside of that range, right? We waited for that TDI on that second leg to make a crossover. Once the market made that crossover, on that Euro CAD, I knew exactly what I needed to do. I had to sell the market because we have a beautiful, beautiful divergence. So that divergence, it clinched this exact trade. So this trade, after that, it was game over. It is really that simple, guys. It's not easy, but it's simple. It is something that we've been talking about on our YouTube channel. You will get to see again. I will also drop a video that you already know by now, where we were trading the exact same trade, the exact same HOD trade, with a little bit of nuance of a ZAR pattern. It was a ZAR narrated by Sam, one of my best students, right? And then this trade, it was the exact same replica of that ZAR trade that I'm going to show you by the end of this video as a bonus. But it's something that is also there on YouTube. So you just need to connect the dots. If you can just connect the dots and trace back these patterns, backtest these patterns. Because the moment you start backtesting these patterns, you will see that, yes, they don't happen often, but you are guaranteed at least 1 or 2 or 3 times you will get to see these trades in a month. All you have to do is to stay patient. Don't veer off into other things. That's what I've been doing. I've been laying low, just watching the market, enjoying the market, learning new things, learning how NAS works, right? Learning how when NAS is moving, what is NAS moving with, right? That National Associations of Securities Dealers automated quotations, that NAS, it's something that I've been learning. So we just saw right now that when we made that sell, the price just continued dropping without showing any mercy to the buyers. That's why the buyers, they start crying once the market creates big moves against them to the downside. So you have seen this trade almost like 100 times now. So you have no excuse. You have no excuse. No excuses, guys. Kein Ausreden. That is German. I've been learning that too from one of my students also. Right? Kein Ausreden. It means no excuses. So you should have no excuses in picking out these types of trades and making money with them. This is Lash. I'm out.
Welcome back, guys, to another episode of Pain with X Trillions. So, today's video we're going to be going over a USD ZAR trade that we took on Friday the 10th of December. So, right away we can see 3 huge vector candles bursting above the Asia range, also above the previous day's high. Now, that right there is a huge sign that market makers are working this pair. That's a 900 pip move out of the Asia range in 3 candles. 900 pips in 45 minutes. So what's the purpose of that move? Well, it's to get retail traders to chase that huge volatile move and trap them above the range. Breakout traders or traders with pending buy orders above this range, we can assume have been triggered by that huge move. Simultaneously, any stop losses of the sellers in this range have just been swallowed up, right? So right now, what are we expecting? Well, we want to see another move to the high just to induce any last few longs before making that reverse and taking their accounts, guys. Look at this candle. Look at this candle. Anybody that trades, you know, support and resistance, they're going long right now. Meanwhile, we are patient. We are waiting for the dealer to show us his hand. In order to execute confidently, we need to see something that we know, something that we've studied, you know, something that repeats itself over and over again. We are not shooting in the dark over here. We know what our setup should look like. Right now, retail traders are telling their friends how this pair is about to go to the moon.
It's going to the moon! Boys, it's going to the moon!
So, right now, look at the spread. Closing down. This is where we're looking to take our shots. Some of us have started to get in. This is where you need to ask yourself, why don't they want to go back to the high? Why are they stalling out right here? That's because they don't want to go up to release the traders trapped at the high of that first spike. Okay, so price looks like it's starting to roll over. Still showing retail traders as a long. And there we have our close below depth. We are in and we are looking for our shift candle. It's the shifting away from the high that confirms to us that we're right in our assessment. Look at that. Pulling away from all of those retail traders that were just buying this pair. Amazing. That spike down that puts retail traders in a panic is the same spike down that produces us profits. Retail traders' pain is our profit. Right here is where retail traders that have gone long at the high start to act irrationally. You know, they move their stops. They start to add to the loss in hopes of pulling back the loss. And as you can see, the trade continues to relentlessly drop down. Beautiful. Notice how price stalls around these levels. You know, the blue tracer, the previous day's high, also the EMAs. So this is where you need to ask the questions. Why are they stalling? Why are they stalling price at these points? Well, if you were on the wrong side of this trade and you were stuck in a long position from the high of the day, then all of these little bounces on the way down are going to give you false beliefs that you're still correct in your bias, and that is gonna, you know, make you want to hold on to the trade and just hope that it comes back instead of just taking the loss and moving on to the next trade. If you have studied our material on this channel, or if you're a part of the X Trillions army, then you will know that these points are simply there just to shake us out of our positions. But we know better than to be shaken out by these guys. We execute at the extremes, and while retail traders are adding to their losing positions, we are scaling out, taking profits off the table, protecting any remaining positions we have, and then preparing for the next trade. So guys, if you've enjoyed this video, don't forget to give us a thumbs up, comment, hit that subscribe button, and we'll see you on the next one. Take care.